Good morning, everyone. Darius Dale here to present our macro minute for Thursday, January 20th, 2022. Starting with markets this morning, we have stocks up, commodities mixed, crypto up, dollar flat, global bond yields down. Big movers, we have the Nikkei 225 out of Japan, the NASDAQ 100 index, copper, Bitcoin, and Ethereum up around 1% apiece. MSCI Emerging Market Index leading everything around 1.5%, up 1.5%. On the economic front, unlike U.S. E&Ps, energy producers, domestic home builders are responding to higher prices with more supply that will weigh on price appreciation in the housing market over the next 3 to 6 months, followed by shelter CPI on a 12 to 18-month lag. So U.S. building permits that accelerated to 6.5% year over year in November. That's the highest print we've seen since August of 2021. Actually, fact check me on that. It might be December print. Taking it to the chart this morning, what we're showing here in the red line or the blue line is S&P Core Logic Case-Shiller home price appreciation. Red line here is or the owner's equivalent rent. That's a factor in CPI and shelter CPI, about 3/4 of that metric. And what you tend to see is these sort of big run-ups in house prices, the blue line, that tend to precede these big run-ups in owner's equivalent rent. And that makes a lot of sense, right? Typically what you happen is when that spread peaks in this bottom panel, you have a big acceleration, a 12 to 18-month acceleration in shelter CPI. And that's exactly what we think is happening right now as investors or as consumers get priced out of the housing market into the rental market for obvious reasons that tends to create this economic relationship. So we're going to continue to see shelter CPI and owner's equivalent rent move up counter-cyclically relative to the broader headline inflation readings, CPI, PCE, things of that nature. Elsewhere, leading survey data out of Europe continue to confirm that Omicron is weighing on global growth, which is precisely what actually needs to occur to experience a positive rate of change growth response on the other side of peak infections. So we got Dutch consumer confidence slowed to -28. That's the lowest print we've seen since October of 2020. French business confidence slowed to 106.7. That's the lowest print we've seen since last April. And then lastly, the PBOC continues to sand off the left tail of Chinese growth with marginal easing initiatives. So they cut their 1-year loan prime rate by 10 basis points to an all-time low of 2.7%. They cut their 5-year loan prime rate 5 basis points to an all-time low of 4.6%. Not a ton of easing, but again, doing just enough to sort of cut off the left tail of Chinese economic growth. And eventually, as we mentioned a few days ago, we do believe Chinese growth is likely to bottom here in Q1. With respect to today's probable range setups, overbought signal in silver, currency volatility, 10-year tips yield, oversold signal in the Russell 2000. S&P 500 that broke down to neutral VAMs this morning, minus 0.1% of downside versus 5.6% of upside. WTI still bullish VAMs, minus 9% of downside versus 1% of upside. Bloomberg Dollar Index still neutral VAMs, minus 0.7% of downside versus 1.1% of upside. 10-year Treasury yield still bullish VAMs, minus 16 basis points of downside versus 10 basis points of upside. Bitcoin bearish VAM still minus 11% of downside versus 5% of upside. Ethereum bearish VAM still minus 16% of downside versus 9% of upside. And then lastly, gold still neutral VAMs minus 3.3% of downside versus 0.7% of upside. So with that, Darius Dale presenting our macro minute for Thursday, January 20th, 2022. Best of luck out there today.